Hey everybody, Ace here. Let me address the elephant in the room. Yes, this. What happened? Well, I really wish I could tell you that it was this amazing fight where I was going swing for swing versus someone else and he got a good hit on me, but I came around and got an even better hit on him and I completely knocked him out. But that's not what happened. This is what happens when your resting heart rate drops to sub 30s and you end up passing out and slamming your face on a nightstand, causing you to black out, split your face open in the process, and then having to go to the hospital. So with that being said, let's talk about insurance, the different types of insurance, and why it's important to have. There are a lot of different types of insurance, but for the sake of time, to make sure this video is not too long for you, I'm just going to briefly touch on the majority of them, and then I'm going to go a little bit more in detail around health insurance. The way you can look at it is there are 4 general types of insurance, and each one breaks down into a subcategory of a specific type of insurance. So for instance, the first one, property insurance. So this could be your home insurance, or it could be something like renter's insurance or insurance for a specific building, but anything to do around properties. And then the second is motor insurance, and this could be anything with a motor. It could be bikes, it could be cars, it could be boats, things along that aspect. And then a third one is travel insurance for anything having to do with travel or reimbursing your travel just in case something goes wrong or something gets canceled. And then the last, which I want to dig more into, is health insurance. So let's dive a little bit more into health insurance and the different types of health insurance. Under the health insurance category would be life insurance. Life insurance pays you in the event that someone dies. So you take out life insurance on someone else or on yourself, and if that other person or yourself dies, then the insurance company would pay out a set amount of money for that life insurance. There are a variety of different life insurance policies. There's term life insurance, whole life insurance, universal life insurance, and variable life insurance. And the last 3 are simplified, guaranteed, and group life insurance. The most common that the majority of people talk about and know about are term life insurance and whole life insurance. For the majority of people out there, I would say roughly 90% of people, you really only need to know about term life insurance, and that is some of the best life insurance that you can get. Term life insurance lasts for a certain term or time frame, 10 years, 20 years, 30 years, etc. And if the person dies within that time frame, then you get a payout. But if someone does not die within that certain time frame, you do not get the payout. Term life insurance is going to generally have less premiums or cost less monthly to pay into than your whole life insurance would. Term life insurance is the least expensive and the best for the majority of the population. Next, under that health insurance umbrella, is eye insurance or eye care, and that's for your people wearing glasses or contacts, or if something may happen to your eyes and you so happen to just damage them, you could get that checked out through your eye insurance or eye doctor. Another type of insurance under that health insurance umbrella is dental for your teeth. That could be things like fixing your cavities, or if you chip your tooth or your tooth falls out and you need to have something done, dental insurance will cover that. Your life, your eyes, your teeth all fall under that general health or health insurance umbrella, but then you have your specific health insurance, which you normally get through an employer if you're employed through someone, but if you're self-employed, you're probably going to have to shop for that on your own and buy health insurance, which will be for your entire body, legs, arms, feet, neck, head, etc. There are a variety, a multitude of different plans for health insurance. But typically, or most generally, you're gonna see a low deductible plan, a medium deductible plan, and then a high deductible plan. At least that is for every employer I've ever worked for, generally offers 3, maybe sometimes 4 plans. So let me go over a few things you're gonna need to know with insurance plans and the terminology within them. First is the deductible. What is the deductible? What does that mean? Well, that's the amount of money that you need to pay before your health insurance company starts picking up the tab for you. If you have a high deductible plan, that means you're gonna have to pay a lot more money up front before your insurance company starts paying those bills, compared to something if you had a low deductible plan. For example, in one of my previous companies, I had the option to choose a high deductible plan where it was about $5,000 that I would have to pay out before my insurance company would start picking up the bills for me, versus the low deductible plan, which was $1,000 I had to pay out before they would start picking up the bills for me. So what that means is when you go to the hospital and you receive a bill, you're gonna have to pay $5,000 with a high deductible plan before your insurance company starts paying anything whatsoever. But if you're on a low deductible plan and it's $1,000, you only have to pay $1,000 out of pocket before your health insurance company starts paying the bills for you. Another term you're gonna need to know is out-of-pocket limit. What is out-of-pocket limit? Well, that's the max amount of money you're gonna pay within a year out of pocket for your covered health insurance services. Now remember, not everything is a covered service, and this is where they really get you. Then, with some health insurance, there is a copay, and this is a fixed rate or amount of money that you have to pay up front before your visit, and it's generally anywhere between $10 and $50. But again, it depends on the insurance company. Most of my copays have been about $20. Another major thing you're going to need to know about is coinsurance, and this can get a little tricky. Definitely when you're thinking about your deductible, your total max out-of-pocket expenses with the coinsurance. Coinsurance is a percentage of the healthcare costs that you have to pay after you've paid your deductible. So what does that mean? Let's say you have a 30% coinsurance, okay? That means you're gonna have to pay 30% of the healthcare bill after you've met your deductible. So let's go through a low deductible plan. You have to pay $1,000 on your low deductible healthcare plan. Once you've paid that max $1,000 out of pocket, then if you have a 30% coinsurance, you're gonna have to pay 30% of every medical bill that you end up getting within that year. So if you've paid your max out of pocket deductible of $1,000 and then you get another bill of $1,000, you're gonna have to pay 30% of that bill, or $300. And then your health insurance company will pick up the remainder 70%, or $700. So as you can see, you're gonna end up paying more than your monthly premiums and your deductible if you have coinsurance. But the coinsurance really depends on the type of insurance that you're choosing. I've had insurance plans that have had zero coinsurance. So once I meet my deductible with a zero coinsurance, I don't have to pay any more money for any other healthcare bills that come along. I would say typically there's 10, 20, 30% coinsurance. The plan I'm on currently, which is a low deductible plan, has a zero coinsurance. Our monthly premiums are much higher because of that, but it's really nice not having to pay money after your deductible with that coinsurance. Coinsurance really depends on the type of plan, and you're gonna need to research what your coinsurance is for your health insurance and compare that to the deductible that you have to pay, because coinsurance can really eat away at your bank account if you're having to go to the doctor consistently. The last term I'm going to touch on is in-network and out-of-network, and think of this as more of like a geographical area. Some doctors within your certain geography are going to be in-network that your health insurance company works with, therefore they're going to charge less than doctors that are out-of-network. So doctors out of state, if you're traveling to maybe Texas or Florida and you have to go to the doctor there but you don't live in those states, you're going to generally get charged out of network, which means they're going to charge you more money, or you're going to have to pay more of a coinsurance or more of that healthcare bill than your health insurance company will. Now, if you live in state in your certain town and you're going to the doctor, that's going to be generally considered in network. Therefore, you're going to have to pay less. And yes, there are going to be doctors in certain hospitals that will be out of network, even though they should be in network. And that just goes down a crazy rabbit hole that I'm not going to go down, but that's the crazy stupidness of health insurance companies. Lastly, how do you choose the right health insurance for you? Well, it really depends on the individual person, because each person is different. But here's some general things you need to think about before choosing your right health insurance. First, how often do you go to the doctor, or do you plan to go to the doctor? Is it a little? Is it a lot? If it's gonna be generally more than the average, or you think it's gonna be a lot for whatever reason it might be, you might want a low deductible plan. Your premiums are gonna be much higher for that low deductible plan, but if you have a low deductible plan, and zero coinsurance and you're going to the doctor a lot, you're going to pay a lot less out of your pocket once your deductible is met. Next, how much money do you have saved up for emergencies? Could you stomach a $5,000 emergency visit? Or do you not even have that much money saved up and that $5,000 emergency visit would completely wreck you? If so, then you might want to consider a low deductible plan. If you could easily afford that $5,000 emergency visit and that's only 10-20% of your emergency fund, then go with a high deductible plan. Because with a high deductible plan, your premiums are going to be a lot lower. And if you have that emergency fund saved up for a $5,000 visit, and you know that might be a once in a blue moon type of scenario, but if it does hit, you're fine, then go with that. The way I like to look at it is with a high deductible plan, if your premiums are lower, so that's the monthly cost you're paying in is only 20, 40 bucks, then that extra money that you would be putting into a low deductible plan versus the high deductible plan, you could put that difference into your emergency fund just in case you do have that medical emergency that comes up. And the last question to think about is how much do you want your insurance premiums to be? Do you want to pay more out of your paycheck now or less out of your paycheck now? Do you want to put more money towards your health insurance up front or less money towards your health insurance up front? It really depends on what you can afford down the road. I like to see what fits in my budget and how much more per paycheck I'm getting on the different plans that I could choose. Because I'm moderately healthy and I don't go to the doctor very often, so knowing that, I would rather pay lower in premiums and then just sack away that extra money into my emergency fund just in case a doctor visit may arise. But if you're someone who might have a family or might have some more medical issues, you might want to pay higher in premiums. So knowing that you're going to be going to the doctor a few times, you'll have to pay less out of pocket in the future. But then again, it all depends on who you are and what your situation is. Everyone's going to be different, and health insurance can be a pain in the to think about and having to deal with. It's really important to have health insurance and to understand the differences of it so you're not getting robbed of your money out of pocket later, and to have health insurance just in case an emergency does arise, you're not literally killing your bank account in the future for some major medical expense. Because you want to have that health insurance on the back to come in and assist you when you do get a $10,000, $20,000, $30,000 medical bill. And that's going to be it for this video. If you like this video or learned anything, please just tap that thumbs up button for me, subscribe for more content, and leave me a comment down below on how bad you really think this looks, because I think it looks worse than it probably is, but then again, you might not, so please let me know. And until then, I hope to see you in the next video.